Hey everybody, such a busy day I forgot to put my shirt on, so excuse me while I am not in my proper dress shirt. Anyway, let's jump in. As we know, markets are driven by fear and greed, and this show today will talk a lot about some of those fears that are out there. Happy Tuesday, it's OCTA. Bitcoin at a vicious wick down to literally $58,900. Now it's back. It shot right back up as usual. They get down and fish out the leverage longs, but here we are. Currently, as I speak, 60,100 rebounded back again. The markets are fearful. And sometimes people in crypto don't realize exactly what's going on behind the scenes, so we will spend some time talking about that today as well. Fear and greed, though, is at 67, which is still at greed, which means the fear and greed index is off. It should be far more fearful and not greedy, considering what's going on. So one of the things that is happening is the Fed. A lot of people believe they could raise rates tomorrow, and that always puts a bit of a lid on the markets. Also a lot of fear. And we have a thing called stagflation. We'll talk more about exactly what that means too. But basically, it's inflation and no growth. And it's the kiss of death for central bankers. And that could actually trigger a good thing. And typically what happens tomorrow after they don't raise rates, the markets can actually rebound. So we'll be ready for that. None of this is financial advice. Start off with thank you to the team behind me. Donnie says, your live and Patreon are my favorite daily routine. Thank you so much. And thank you for letting me do live so we don't have to do video editing. So every day I'm raw and unfiltered. Today, unfortunately, there's a predominance of ugly news, and we're going to touch on that right away. Big thank you as well to Jeff Hammer and Sir Winston and T&D Tesla and K8 for being in the chat. Crypto market over the last 7 days, pretty brutal. This is everything divided by Bitcoin. A lot of red, with the exception of Tron. Tron, the only green spot out there, but everything else kind of down. In dollar terms, Bitcoin, well, Bitcoin's actually rebounded again to 60,100, but it was 59.7 not too long ago. Down 5.2% for the week. ETH down 7% for the week. Solana down 6% for the week. XRP, DOT, etc. ICP. A lot of stuff, a lot of weird stuff happening. And you know, for the first time, you now have different crypto projects and crypto so-called influencers. I'm not one of those, by the way. Throwing mud at each other, and it's kind of interesting to see as well. Gabrielle out there on the Czech Republic, thank you for coming. Let's look at some data first, some crypto-related data. This one is one I like to look at is market cap over daily active users and where you really don't want to be. So when you have a chain, with the exception of Ethereum, because Ethereum creates so much value, has so many high fees, and has so many L2s, you can kind of get away with ETH being valued at $1 million, $1.001 million per user. That's an uncanny number. But Polkadot, yeah, I know people say, oh, it's a layer zero, whatever. $2.3 million per user. Stacks, $1.8 million per user. ICP, $1.2 million per user. Cardano, $803,000 per user. And on and on and on. You got to be careful. This stuff say nearly $800,000 per user. When you use those type of traditional metrics, I don't care where you come from. That means the chain is overvalued, unless, of course, they can fix the adoption problem in a very short amount of time. Now, nice to see as well people talking about token unlocks. Some nasty ones this week coming too. And again, a reminder to everybody, 99% of crypto is a money grab. All right, so be careful out there. And when you see things like this, be aware. I've never even heard of Meme as a token, but they have a 34% unlock. You got World Mobile Token or whatever it is, another 11.18% unlock. DYDX, another 11%. Sui, another 3%. ENA, never heard of that, 4%. Mavia, never heard of that, 25%. And Gala Games, well, Gala whatever, GL, they always grab money. That's just the nature of the beast. Be careful, everybody. And all new tokens, with the exception of very few that have very good tokenomics, will smash you in 2024 if they're released in 2024. And another view, did I share that same thing twice? I think I did, yes. This was an interesting thing. Shout out to Mando. This is on his channel today. Wrecked Mando, one of our new DCA team members. Now chains are calling other chains scam chains. And by the way, I will do a video of all the latest, what I call either scam tokens or dead chains, two categories of what I believe are the ones you do not want to be holding. And I've been doing this for 3 years, making myself very unpopular. But now that everybody's throwing mud at everybody, I can do it again too. We'll see. But this is a funny thing. I think it was the head of ICP accuses crypto of having a problem because everybody is a snake oil salesman. And this is Mando here. Those guys are all scammers. My snake oil is legitimate. So anyway, we'll see. That video will be coming this week. We'll look at, we do nothing but look at metrics and data, and we'll weigh up the pros and cons of everything else and show you exactly some of the stunning information out there. And as I warned all during the bear, those old chains are simply not going to make it. They don't have the product market fit. They don't have the speed. They don't have the scale or anything like that. So with that, let's talk about some other, this is bad news, but you could consider it good news. Roger Ver, a very colorful history, early Bitcoin investor. I think he was behind things like Bitcoin Cash, a CoinFlex scam, other controversial projects like OneCoin and BitClub and Ponzi schemes and da-da-da-da-da. What else? I think he was involved with Bitcoin Cash, definitely, etc. But he was just arrested in the US by the IRS. No, he was arrested in Spain by the IRS. And they believe he is on the hook for about $50 million, $48 million of tax evasion. So as I always warn, always pay your taxes, okay? And don't think you can bounce off to another country and get away with it. They will find you, okay? Especially if you have $50 million. So that's kind of, I don't know. I have no problem paying taxes. Now, consumer confidence as well fell sharply in April as inflation worries, again, are hurting the average consumer out there in the market. We are at the lowest level since 2022, nearly 2 years. And we've fallen to a level of 103.1. And consumers are less positive about the current labor market situation and more concerned about the future job availability, AI, income, the cost of food, the cost of gas, politics, infighting, etc., etc. It's just incredible. Stephen Weston, thank you for coming. And sorry, this is going to be a bit of a sad story today, but there is good news at the end. I promise you all. But this is kind of the reality that's biting, and it's very interesting as well when you put this out there, and the fear that the consumer has, and the consumer doesn't feel fine, but the government tells you, job market is strong, the economy is strong, and everything else. No, it's not, because it's not hitting people's pockets. Somebody just asked me, I talk about stealth QE happening for the last 18 months. And they say, what do you mean stealth QE? Well, it's things like student loan forgiveness and funding proxy wars and BTFP bank program, bailout program. All that stuff is QE. They are bringing on debt, but it's not hitting your pocket. It's not giving you a better job. It's not giving you a raise, and therefore you're feeling the pinch, you're feeling the pain. And again, US data, same thing in the UK, same thing across Europe, same thing in Latin America, Asia, Australia, New Zealand, Canada. It's the same everywhere, and it's ugly. Nobody is feeling good. And the Fed has a problem. Sorry, there's a lot of macro stuff today, but this is really keeping a lid on crypto right now. The main inflation measure, which is called PCE, is heading in the wrong direction. On this chart here from the team at Econometrics, it's going up. No, basically the Fed has turned the screws for the last year and a half, jacked rates higher than ever in the history of the United States, and they still can't control inflation. And I've also said they can't control inflation anyway because it's driven by things that they do not control. So anyway, it's bonkers time to be alive. But this brings in the next fear. And we are still in the ugly news section. And I'm sorry there's so much of it, but that's just the way the cookie crumbles. U.S. economy grew only at 1.6% in the first quarter. That came out a couple of days ago. And that's a slowdown from the 3.4% in the previous quarter. By the way, that 3.4% was all driven by government spending. This isn't small, medium-sized, large businesses creating value. It's government spending, okay? Not a special GDP number. And inflation, again, rose to 3.4% and way beyond their 2% target and is going in the wrong direction. They are completely boxed in. Now, the Fed is clever enough to know we are facing a serious problem with jobs right now. I've been warning about this again since 2022. AI is going to reduce the number of staff that are needed at companies, and that's going to have a big impact. Also, we're seeing an uptick in the amount of jobs that people looking for jobs versus the amount of jobs that are listed. And that's also a big problem. And that's only going to get worse. So I do hope, I pray that the Fed sees that the job market is broken. There is no job creation. It's all part-time Uber gig economy jobs, which of course will be going as well in a couple of years with things like robo-taxis. And it's just a lot of ugly stuff happening. So yes, the government is very fearful. Where else does he say here? Basically, they've missed their target. And stagflation, I just know from history, it hit last time in the 1970s. And it's the worst nightmare for central banks. The worst. So the silver lining of this, though, is when they do hit this stagflation, they've got to juice the economy, which means they've got to money print and spike things up again, which again will help our assets, which is the good news. Now, last piece of ugly news. This guy, Jamie Dimon, like he's the Jim Cramer of macro. Whatever he says, the opposite happens. He says the economy is unbelievable. It's booming. This is the best we've ever had, he said in an interview at the Economic Club of New York on Tuesday. Unemployment rate below 4.4%. And Americans are much wealthier than they were 1 or 2 or 3 or 4 or 5 years ago. And he believes that no matter what happens, the American consumer will be resilient. All right. He just said that. And this Michigan survey is the most accurate survey in the United States. Consumer confidence is in the toilet. So the question is, who do you believe? Michigan University or this guy? Anyway, it's craziness. Now, trying to improve the mood a bit, we're going to switch to the bad news and then we get to the good news, okay? So bear with me. We had a record-breaking 3 weeks of digital asset outflows. Again, we haven't had this before, totaling 435 million. Grayscale was a big chunk of that, about 150 million if I recall. And again, never happened. So the silver lining you can pull from this is we've never done 3 weeks in a row of outflows before in digital asset funds, which means the 4th week will probably be positive. Will it turn around this week? I don't know. Maybe if the Fed does something to juice, and how they talk tomorrow. And I just hope they're looking at the right data because the data is not positive. Now, April has sucked. All right. We had 7 green candles all the way to March of this year. And April has been nasty, down 15%. But again, all good things come to an end. And after digging more into it, the month after halving is not always positive. It's not always great. It's plus or minus 5% in the returns. Looks like we're having a nasty one too. But remember, we still have a couple of weeks left. We are only, I think, 10 days into the post-halving period. And global liquidity is still headed down. And we are waiting for this thing to turn around. Once that thing does turn around, though, well, it'll be gangbusters. And thank you for the good juju. Bitcoin just added $100 in price as well. We'll take that. All of these, all my videos are turned into, we're going to have a really cool team. Pumps them out almost in real time. So they are out within 24 hours. Every slide, all the content, all the key messages you need. If you prefer to read or listen to a recap again while you're jogging or at the gym, you can do that. And again, that helps other people. The good news, Let's talk about crypto stats. We are still up over the last 28 weeks since I started measuring this. 28 weeks ago. It's hard to believe how time flies. Market cap is up $1 trillion. By the way, it was up double. It was at 2.6 trillion just 2 weeks ago. Now it's only 1.3 trillion, or up 1.05 trillion. Active addresses doubled. Transactions went from 40 million up to 65 million. So things are still not bad in that regard, but will get a lot better. Remember, once things really start spicing up, it'll bring a lot of on-chain activity to the place. Fear and greed, as I mentioned, is at 67. And Bitcoin season is still in play, which means Bitcoin is outperforming the majority of the altcoins. What that looks like here is this is the top 50 over the last 90 days. And I know people are feeling pain. It's hard to believe how unhappy people are right now. I mean, we're in a bull market and people are very frustrated. But things like Solana are still up 30% over the last 90 days. Bitcoin, 43%, etc. But if you're in some of these new things that I've been warning you about, Celestia, Arbitrum, Lido, etc., you probably are not feeling happy. Again, beware of the new coins. Please study tokenomics carefully. Do not be a bag holder or exit liquidity for these players. Now, flows by assets, a little bit. This is in the good news category because although Bitcoin was down 423 million for the week and Ethereum 38.4 million, Solana was up 4.1 million. Not bad. Litecoin was up. Chainlink was up. Let me see. Solana 4 million. Litecoin 3 million. 2.8 million is Chainlink. And that's overall very, very positive. And we are not even in alt season yet. And the investors are coming back to these assets. So I take that as a bit of a positive. Now, daily active user update. This is what's happening with chains. You can see Solana is still up at 1.1 million daily active users. They did have a hefty 2.5 million daily active users. And the chain held up. Bitcoin 497,000, Ethereum 465,000, and Base, that's in smashing everything else, 362,000. Unfortunately, names like Cardano are now down to 25,000 daily active users. They used to be 60 to 80,000 all the time, but again, it's competitive out there, and the few winners will take most. That's just how it works. Speaking of winners, Phantom, part of the Solana ecosystem, says that it had 7 million monthly active users, which is pretty stunning. 7 million. You got massive chains in the top 10 with 25,000 daily active users. You got this little wallet here with 7 million monthly active users. Let that sink in. Alvaro, thank you so much for coming. Now, another new stunning statistic. When I do 2 videos a day, it's hard on my little brain. So anyway, let's go. Phantom beats Coinbase for the first time in the App Store. Again, big change here. You can see Phantom is the little teal line and pink is the Coinbase line. I just surpassed it for the first time ever in history with 22,000 downloads on January or whatever month that is. I can't really see the month, but anyway. Point is, it has surpassed it. And MicroStrategy, in other good news, is still buying Bitcoin despite the price being so high. They do like to buy the dip. They recently bought, well, so far, actually, in Q1 of this year, they bought 25,250 Bitcoin for 1.65 billion at an average price of 65K. So on that first quarter buy, they are a little bit underwater, but they still hold 214,400 Bitcoin in total. And that is way over 1% of the total supply, especially when you consider 5 million coins are lost forever, according to my calculations. And the company reported its holdings at a cost of 7.5 billion, and average cost per Bitcoin is 35,180, and they bought like 140 coins last week. So they're still stacking. They're still confident. Now, back to the Fed. This is good news because this is typically what happens. They telegraph very well what their intentions are. And tomorrow, there is a 98% chance they're not going to hike. That means rates will stay the same. But remember, over the last month to 6 weeks, a lot of people were afraid that they were going to hike. So the fact that they will stay the same might actually be good news for the markets, and the markets could rally. So we'll find out tomorrow, and I'll be monitoring that carefully. But the good news is they're not going to jack rates, and they know they can't because they're already spending nearly 1.1, 1.2 trillion on interest. If they jack it again, it just explodes the deficits and causes more money printing, which causes more inflation, which is the whole death spiral thing happening over and over again. And Eurozone, for our friends in Europe, they did not cut, but they are still planning to cut rates in June, which might deviate a little bit from what the Fed is planning to do as well. But the inflation is steady at 2.4%, which is good news. But the rate cut will be coming. Again, they need to juice the economy because the GDP growth in Europe is not good. Okay, so a little bit of a mixed bag there of good news and bad news. So stocks, the last 7 days, interesting. Google up 2.95%, Meta down 13.3%, Apple up 2%, Nvidia 4%, Tesla up a whopping 28%. Big week for Tesla. But remember, they've also been beaten down hard this year. They were down, I think, 38 or 40% so far year to date, the worst performer. So you can only keep a rubber ball under the water for so long before it pops up again. So what's going on with Tesla? A lot of news. First of all, the world is now beginning to realize that Tesla is actually the biggest AI company on the planet, and AI is the hottest investment category right now alongside crypto. And Elon Musk did tweet as well yesterday, Tesla will spend $10 billion this year in combined training and inference AI, the latter being primarily in the car. And a lot of people are confused exactly what this means. And Elon warned any company not spending at this level and doing so efficiently cannot compete. So to put things in perspective, Ford invested totally $7 billion in R&D last year. Tesla is investing $10 billion only in AI on inference, which is critical. And inference is kind of the real world application of knowledge that an AI model has learned in the training process. Okay, the inference part is the ability to take that knowledge and react on it in real time. So I love this graphic here. Shout out to, well, Ruh Roh for the graphic and Chamath for letting the world know over the weekend in the All In Pod that 99% of the AI market value will be inference. So training is like a doctor going to university to learn to be a doctor, and inference is actually on the operating table. And you can see what really matters. It's not the training, it's the real life application. If you're hurtling down the road in a car that's driven by FSD at 80 miles an hour and something jumps out in front of you like a truck or a ladder falls off a car or whatever, the car needs to react in a couple of 100 milliseconds to get out of the way and what to do. That's inference. That's where Tesla's spending $10 billion. That's what no other car company or AI company can actually do right now. So they were also, Elon was in China as well. Pretty much everything I can interpret, they got the green light to deploy FSD on Chinese roads. Remember, they sell 3 times more cars in China than they do in the US, last time I checked. And Tesla China is rebounding very fast with the weekly growth in numbers there as well, which is very, very good to see. Maybe this is triggered by FSD too. And we do know that the Chinese consumers love technology and they buy cars that have the most cutting edge technology. They do not buy cars that have shiny wheels. They like the infotainment and all that other good stuff. So that's the show for today. I hope you like it. Thank you all for coming. It's been a rough day out there. But hopefully the worst is behind us. It's a good day for sniping as well. A big thank you as well to T&D Tesla and Piper and everybody for coming. Stephen Weston, Alvaro Rosales, and the mods in the chat. I'll see you all tomorrow for the Bitcoin Daily. It'll probably be another dump day given some of the data I'm seeing on chain with Coinbase and Grayscale. So prepare for that. But I will update the dumpage in an hour or so when I get the data to everybody. And then we'll see If it'll be overcome, I don't think it will, but we'll just plug away. And hopefully Bitcoin can hold and hover around that 60K mark until things get cleared up. And maybe tomorrow, if the Fed does not hike and if Jerome Powell isn't too hawkish, we could have a little rally. So watch this space. Thank you, everybody. Oh, by the way, quick reminder, I don't have a crystal ball, but I do have a lot of data that helps me make calculated decisions, but they are not always right. So remember that, everybody, as well. Thank you so much. Bye-bye.